Hello everyone, welcome to another weekly market review. It is the 31st of August 2020. The market has been very kind to us. I'm going to dedicate part of this review to some macro analysis. Here we're starting as usual with the total market cap chart. We are on the monthly because it is the last day of the month, so it is pretty significant. Considering what we've done, we have broken and closed well above. The month of July was a very strong candle. And you can see the month of August has been a slightly different story. But what I would say is that this is still a consolidation, and it is a very bullish consolidation. Because generally, if you do have consolidation candles, they look slightly more like this, which is scaring people to the downside, and with big wicks more towards the bottom. But you can see that since we have just broken up from a very high time frame base, this is something that is significantly bullish if this is to be a consolidation. A negation of this being consolidation, I would say, is a loss of this quarterly 300 level. Currently that is looking like it is a lower probability. Let's go down. Let's quickly look at the weekly first. So the weekly, what we can see is we tried to head higher. We touched this monthly level, these monthly highs, which have also been a strong level for June 2019. We got quite a strong rejection from there, and currently this key daily level, let's quickly go to the daily. This is what I highlighted in the Discord as well. This is a very key level, and you can see the number of times that we did get rejected from this level. So we've had another bearish retest of it because we have gotten a reaction. What else I want to say is something about the structure. This is not a very bullish looking structure. Something like this, a very V-shaped strong structure. I don't think this is exactly bullish. Price has to do something more at the bottom for this to turn into a more bullish looking structure. But for now, what I would say is that we have just had a bearish retest. If we are to be looking for further upside, it is on a reclaim and turning this level into support. If that is so, then we can look at higher levels. We can look at this 371 level, which is also a daily. And of course, if this is taken out back above at the monthly. But for now, what this is looking like, the nature of this is a bearish retest. Let's quickly look at the fibs. So yeah, slightly above the 0.5. It was possible to get a touch on the golden pocket, but the total market cap generally likes 0.5. So the fibs are not exactly that significant over here. But yes, for now, this is what it is. Apart from being a bearish retest, I would say just look at the number of equal lows over here. This is a lot of liquidity, just begging to be taken, because what we've had is price come all the way down, did not take this liquidity, and then moved up. That gives even more reason for this to be a bearish retest, and even more reason for price to come and search for this liquidity. Quickly go down to the 4 hour. Let's look at it closer, how we can plan this out and how this can pan out. There are a couple of ways. Essentially, first, if we do get a market structure break on the 4 hour, possibly another pullback, and then we can make this move to grab this liquidity. That is something which is more convenient. The other more aggressive way would be that we just turn from here and take liquidity higher and then make this move down. So I'll just color them slightly differently. Let me make this red and orange. So a couple of downside scenarios if this is how it has to pan out, which is logical considering what the amount of liquidity we have below. But if we are bullish, what I would say is that we do end up finding support around these VWAPs right here. Let me just add another VWAP here. Okay, so you can see why we are trying to get a reaction from here. So the bullish scenario would be that we find support over here, turn back around, and instead of finding resistance here again, move over and turn this into support. This is when I would be looking for further upside. But considering the nature of this reaction that we got from up here, it's a very steep peak, and since then you can see this daily level has just been giving rejections. 1, 2, 3 rejections. And there was also a couple of the strongest rejection. I mean, this is a very strong level. Just look at the rejection we got on the 2nd of August from this level. So I would say this is the key level. This is the level using which and based on which we can we can shift our bias, and once this does turn into support, it would be a good level to be managing risk from. So for now, this is what I can see, that it is probable that this could have been a bearish retest. We can get another test of this, another rejection again, then this would become a good place to manage risk for downside, and we'd be looking at essentially this weekly 323 level, which would turn this in, which would still further continue to have this prove itself as a consolidation. Like I said before, the negation for this entire range, this new range that we've been forming over all of August, the negation for this being consolidation would be a loss of this quarterly level. So that is far below. It's easily another 20% below. So the market can come 20% down and still be bullish, because this is the base from through which we have broken up from. But considering the kind of bullish consolidations we've been having, for now it is a lower probability. If the market has to be searching for liquidity, there is enough liquidity here, so there would not be too much of a reason to really come down. But you never know, when in crypto markets, when there is too much bullish sentiment, when there is too much over leveraged positions, we do get cascades. So there is still a potential that a cascading liquidity drop could eventually hit this level. If it is, this is like a jackpot, a golden level to be able to manage your risk from. Look out for that if it does end up happening. But for now, this is what we should be searching for, the weekly level. What I would do is, let me just try to add another anchored VWAP, possibly right from the bottom of this consolidation, this liquidity grab right here. Yeah, so this is my strong level for now, guys. This is got confluence with the anchored VWAP. So if we are to get rejected from here, nice place to manage risk for this level, which has some nice confluence, a lot of liquidity. Here's the altcoin market cap chart, and what we can see is another decent month for altcoins. Basically, the total market cap you saw was slightly more bearish, which meant Bitcoin is in a stronger consolidation, and while Bitcoin is consolidating, also outperforming against Bitcoin, So odds against BTC, all BTC pairs are doing well this month. It's reflecting in this chart. We're going to have a very strong close above this quarterly level. This was the rejection. This was a big rejection in 2019 June, and we are going to get a monthly close above this, pending we don't get a very large drop within the next 12 to 14 hours. So for now that looks less likely, and this does look like another positive close. And basically this is a very strong market since April. You can see how well altcoins have done. It's about 150% since April. And what I would say is that they are uh, currently not, as a broad market, outperforming commodities, because if you would look at a lot of commodities since March and April, they are doing similar kind of performance. What we would like to see is that this broad market does end up outperforming the commodity market, and when or whether it happens. So we will be eventually looking at some ratios that have commodities involved in them. But for now, this is more than what is happening in the crypto circle. It is to do with the dollar. We're going to see one macro chart that has to do with the dollar and how that is directly affecting most asset classes. If you've been watching the reviews, I've been talking about it since really long. If you're in the Discord, you know that we very closely follow the dollar as well, because it is currently the real and the big driving factor in the markets. So for now, a very good monthly close for the altcoin market cap. And in terms of the weekly, you can see we held this quarterly level on a weekly closing basis, but you can see that this weekly close, it hasn't been strong enough to come back up to this 144 level. Because if we had strength in this candle, this is the level where we would have eventually at least closed near or gotten to, but price only kind of wicked till up there, and we were not able to get a close there or around there. So what I would say is the bullish case would be once we can start reclaiming and closing above this level. Last week I did tell you this is the big weekly block, this is the big weekly level that has been holding price, and you can see how much price action we had here in 2018. Before getting a big drop, we had a lot of price action, and this seems to be the zone where we are getting this second range after a very impulsive move. You can see we had the first impulsive move. Right here we had the first impulsive move, good 140% move. But while the impulsive move, there was the first impulse. Alright, this was 120% impulse, and we had a very strong consolidation. It was more like a ramp. I will show you this ramp later. And what we're doing is we've had the second impulse, which is slightly weaker. You can see this is 86% impulse, and now we're getting a consolidation also, which is shaped differently. Look at it more carefully on the daily. You can see the ramp. I think I had built out a channel on this ramp. Here it is. It's here on the 4-hour. And I had shown this on the Discord. I had told people when we were consolidating here that if this is what a ramp, when price does this, like this is as bullish as a consolidation can look. This is when an asset is weak, this is supposed to be what a sideways consolidation is to look like. When an asset is even weaker, we get a downward facing flag. But this generally is supposed to be a bearish formation, that we have a rising flag, but once price breaks above this and tests this as support, it becomes very bullish. This then becomes a ramp, and once this becomes a ramp, you can expect a very impulsive reaction to come from that. And you can see that straight away we got a 25% move, just in the matter of a week. We got that big 25% move. We got a big flush, but you can see that right after that flush also we just got another 30% move off of it. So this is the strength of a consolidation like this and a ramp, because price is just ramping to go higher. The tendency is to want to go lower, the tendency is to go sideways, but there's just so much demand that every dip is just trying to be front run, and this is the kind of shape that comes out of it. So we have made out of that ramp, we have built our first kind of correction. And what we've done now after that correction is, I would say that this is still a retest, because we have spoken about this in the total market cap chart. So this is still a retest. So this is the first move down, a retest, possibly another consolidation, and we get that second move down to build basically another structure which is still consolidative in nature. Because once we have built a ramp and moved out of it like this, and you can see the kind of monthly closes we're getting, the probability of coming back down and building bearish structures, it becomes lower. So for now we just have strong trends building on a higher time frame, and that is something that points to further upside. Whatever kind of big correction you do get, make sure you do have ammo for that, because this might be in the long run a very good buy, a very good macro buy. So this is something to be well aware of, and this is a great market and absolutely amazing volatility. If you are able to be selective, there are such big moves that are being on offer in the cryptocurrency market space. That is incredible. Even if you're playing spot markets, Uniswap, Sushi, and now we're gonna get the new Serum based exchanges with possibly pairs with Sol. FTX, the creators of FTX are doing a very good job with innovation and quick action in this market space. So this is very intriguing, and after 3 years of what has been the cryptocurrency market, we are now in a very interesting space. Even fundamental analysts are finally getting paid off. All the years of bear market research. It is, if you were deep into fundamental analysis, you would have known that DeFi is the next big thing. There is still a lot of room for that. If you do understand bubbles, this is not how bubbles end. This is how bubbles begin. This is the shape of it. Price starts ramping, things start getting front run. Bubbles end when when your driver is talking about it. Bubbles end when your grandmother wants in. That's when bubbles end. Not when nobody even understands what decentralized finance is, and not when most of the regular traders have yet to dip their toes into that asset and into that sector. So this is what we can see for the altcoin market cap, much stronger than the total market cap. Yet we are starting to get like the first corrective structure after a very powerful move. So if you look at it, this is another corrective structure that we had, and it's building something similar. So we had this very sharp sell off, and all we've done is we've gotten that close to that 618, and we can hold this as a possible probability which is higher than moving up, at least to come and test these lows, or at least if price is too bullish, this quarterly level might hold, but to test these lows and possibly get some liquidity which is clear on the total market cap chart. This is probable. If price is too bullish, maybe we still get a slight retrace and price starts getting front run again, around the quarterly level. Then we can find another place to manage risk for further upside. So for the altcoin market cap, we had targets for our base which are yet to manifest. So we do know, even technically, even with classical charting, we do have further upside for now. Strong momentum, all dips, especially the bigger dips, are great opportunities which may end up being something good for a long run. For Bitcoin here on the monthly time frame, it is much clearer and still more apparent about this consolidation. Very strong July monthly close above the quarterly level. I had spoken about this. This was the second highest monthly close of all time. That's a pretty big deal. What we're doing is consolidating. I would say a negation for this setup to be bullish is if price can start closing below this quarterly level on Bitcoin, on a higher time frame, start getting daily closes below this 10,770. I think that would spell a bit of trouble because you don't want such a high time frame base to be manifesting a false breakout. What you want is, yes, there is strength, slight consolidation, and over the next month, maximum two, you want to see price move out of here pretty quickly. So for now, this is great. What we've had is no signs of this weakness. We would only be seeing that, of course, relative to altcoins, we have been getting weaker. Quick look at the weekly time frame. So you can see we had a bullish candle and then we've had that correction. Last week we failed to break above this key weekly level 11,750, and currently, we built this bullish candle, but we're not getting follow through just yet. So let's see how this week pans out. Considering the liquidity, I think on the Bitcoin chart it is the most clear. Just look at the equal lows over here. This is seeking a lot of liquidity, guys. This is really going to attract price. As soon as price is starting to get weak, this will be the first area of attraction. There's like 1, 2, 3, 4 wicks right here where price has been absorbed. So there's just so much liquidity right below this level. It looks very attractive to anybody who understands liquidity theory. So we have gotten a rejection of this key weekly level, and what I would say is that if we do end up building that structure on the total market cap without reclaiming this key level, then we can look for this move. And I think anything below 11,000 would be so attractive on Bitcoin. And especially, if we can get down to this quarterly level, give another retest to this quarterly level, which is in confluence with this anchored VWAP from the bottom of this range, from the bottom of this big move that Bitcoin has made. This very nice confluence over here. So if price can come here, it's going to be a very attractive long-term swing buy. So for me, there is preparation for this manifestation. Otherwise, yes, if price is too bullish, we could still just get a liquidity grab right below here. This daily block which has been holding price, this could be the one that supports the market, and this 10,770 level gets front run. That is still a probability, but yes, if we get something like what we got in the first week of August with a lot of cascades and big liquidations, then it is possible that we could hit this level. Even slightly lower, 10,500. Why 10,500 is so significant, I'll just quickly go to the weekly, is that it is going to be a retest of this big structure. It's a head and shoulders, so we have not got a retest. So this 10,500 would be a bullish retest of a breakout. So these are the two big levels that if price is attracted to and we get it, I think this is excellent places to manage risk for long-term swing positions, because considering what the macro market is reflecting, this would just be great retest and further continuation to upside. I did say that we're going to be talking more about the macro time frames. So for Bitcoin, I have a macro chart for you, and this is basically a grand Fibonacci extension macro chart. And how I've built this out is each first impulse has been extrapolated with Fibonacci levels, and you can see how wonderful this asset has been and how pure its reactions have been. So the 233 fib for the first cycle, where Bitcoin hit 33, then again the 233 fib for the second big cycle in 2014, where Bitcoin hit 1200, and the third cycle, you can see this aspect of diminishing returns. Rather than the 233, this time it was the 144. This is when the ship got denser, the ship got heavier, and there was less momentum and smaller returns. But still, it was the 144 fib that held out. So for this cycle, what we have is two potentials. What I would say is either the 89, which is the round number, close to 100,000, or the 55. But the thing is that we cannot be extremely and perfectly sure how much momentum we have out of it. But these fib levels are very significant, and you will see time and time again how well they react. And I would say to be watching them closely. 42,000 is another big level for me. I would say this is very, very significant. So if not the 89, 55, the 34 still seems like a very, very good probability to me for this macro cycle on BTC. So this is the bigger picture on Bitcoin. You do know that we are having a lot of printing on dollars. There is another macro fractal that I'm going to be looking at in traditional markets. I will assimilate Bitcoin into that bigger picture as well, and we'll think about the bigger cycles. Basically we're thinking about this next decade right here. So in terms of that, you do know that Bitcoin has really been maturing as an asset class. We have such controlled inflation, we have such large trust, that the use case of this is just going to continue to rise. And as the use case rises, the demand is going to rise, the price is going to be in line with that, because it is a rare asset, it is a scarce asset, which is why I'm interested in trying to extrapolate how it works in terms of its comparison to other commodities. So we will delve into that a little bit, but for now, this is what it is. These are the prices that we can expect. The 34, the 55, or the 89. We will see how heavy the ship is, but price is going to be attracted to these fib levels once we have broken out. I think once we have broken out of this 13 level, which is a target for one of our bases that we have. I did map out these Bitcoin bases. The lower base had a target of about the 17,000, but once we have broken this, these fib targets activate, and the first one I would be looking at is the 34 level. And once we see how price reacts from there, we can be looking at the higher levels. So this is a nice chart, and you can see the magic of Fibonacci. You can see how the universe is connected, and how whatever is encoded into the universe, it is reflecting through human emotions in price as well. As technical analysts, what we're doing is we're watching price so closely, but this is just a reflection of human emotions. It is resonating with this code that is encrypted within the universe. This code, this pattern of Fibonacci, it is the shape of all things. It is what defines the shape of a galaxy. It is what defines the shape of a flower. you know, and this is what is defining the shape of price, which is the shape of human emotions, which tells us how we are so much a part of nature, whether we know it or we do not. We are part of this universal construct, and this is its method, and this is its science, and this is a reflection of what happens when you extrapolate it. So let's see how price pans out, and let's see which one of the Fibonacci levels is Bitcoin going to start to look heavy. But we do know start once we start hitting the objectives of these technical targets, we are going to end up breaking all-time high, and once that happens, we will be looking at this 42, 65, and 100,000 on Bitcoin. Sticking to the macro time frame, we're going to look at this 100-year. It's essentially longer than 100 years old. This chart of the Dow Jones Industrial Average. Shout out to Kazanomics. He was the one who brought my attention to this chart about more than 3 years ago. And what I've done is I've extrapolated a little bit more data from what is possible and the possible potentialities of this chart. And first of all, we are going to be using the Grand Fibonacci that I had been using before to extrapolate price on Bitcoin. And what I would say is that what this chart is reflecting is the potential for 100,000 Dow, and we're gonna extrapolate time, as in how much time it would take for that kind of a target on price. But basically, what you should understand is the fractal nature of this chart first, and this is what I'm trying to show here. Essentially, here we have the Great Depression. This is the First World War. So when we have war, we have this consolidation. We have a small flag outside of the war. It comes with a narrative of fear. I think at this time it was the Korean War and the First Cold War, and we move out of here with a really strong move. Come to another consolidation with another war. I think this is the 70. This is the Vietnam War, and what we have coming out of that is a consolidation and another Cold War. This was the second Cold War that we had, and then we have another massive leg where price moves out of there. And what I wanted to show you is essentially where we are in this big leg out of a consolidation. Because what have we had? We've had the housing crisis and this war on terror, and this was the big fear that caused this consolidation. And then we had another narrative of a potential US-China Cold War and Russia war. And what we've done is we've done something as similar to the 1987 drop as we've had any time before. But what is different this time is the reaction that we have gotten out of this drop. Because 1987, we did have a bunch of sideways. You have heard me speak about this being the potential drop from 1987. But what we got is a bunch of sideways till price hit new highs, and then we got another year of stagnation with another drop, and then a big continuation. So one big pattern that I want you to look at is how much time it took for this pump. This is a 260% pump that we get out of this structure, out of this big structure. And essentially the first pump that we got, look at it, it is around 4,500 days. The second pump that we got, it is 3,000 days. So this is a 66% drop in the number of days it is taking. This is the parabolic nature of price. Look at the consolidation. This is a much longer consolidation, and essentially look at the difference in the consolidation, the number of days. Here we have 6,100 days for consolidation. Here we had 5,300 days. So this is the parabolic nature that the shape of this chart and price is taking, you know. And what we're doing now is going to be even more parabolic once we do break out of this structure. So in terms of the macro picture, what I can see here is that we are due on the Dow Jones Industrial Average to take out the all-time highs. But what I would say is the chunk of this move from the bottom is now over. I think what people will see over the next year, at least the next year, at least if not more, is for price to stagnate, because right now we do see that there is a big disconnect between the fundamentals and the technicals. Because of this disconnect, what we have is the fundamentals needing to catch up, which is what could cause something like this, which is when price does get stagnant. There is one big sell off. That one big sell off is there before every massive pump. So I would say that 2021, the sell off that we get in 2021 would be a significant buy for this parabolic move that we are to get over the next 6 to 7 years, because where this ends in terms of time for the next consolidation is 2027. So I would say 2021 is the big dip to buy if you missed this. If you didn't miss this was essentially one of the dips of this is the dip of the decade, essentially. And it's happening right at the beginning of the decade, and this is just gonna be if this chart is to manifest the way it is, because if you look at the waves, we've had this is the first wave, the second wave, and this would be the last wave. If you look at Elliott waves, then this would be the fifth. And in terms of percentage, you can see that we are looking at similar 260%. And if I match it with the Fibonacci, you can see it matches so well with the round number of 100,000 plus also a fib level. So we have confluence. This is not just randomly extrapolated. We have multiple confluences. We have confluences with Fibonacci, we have confluences with time, and we have confluences with symmetry of price. Alright, so we have multiple confluences that point to the potential of 100,000 on the Dow Jones Industrial Index by the year 2027. So 2021, it depends on how long this consolidation up here lasts, because what we've done is we've moved out of this bottom very quickly. All right, and the shape of this has been so powerful that we have to see what kind of a consolidation comes out of it. Is it a really bullish consolidation, or do we get this one more wave of fear out of it? Because that next wave of fear would be the big dip to buy, guys. If you miss this dip, then that would be your chance to really be part of something great. This is what wealth generation looks like. And now that we have looked at what is possible for this big wave that is to come, and there is fundamental reasons for why this would happen as well, and why this would happen so quickly, because you do know, there is a big race to head to Mars. China has already been launching, US is on its way, and everybody needs to move into the next phase, the sci-fi age that we are moving into. 2030 and beyond is sci-fi world. We're going to be living in sci-fi world where you will see neural networks of human beings being connected to the technological networks that we have. You will see space and space wars and asteroid mining and space settlements and deep exploration into space, possibly future technologies being revealed. Already we are planning and trying to reveal extraterrestrials right now it's just about unidentified flying objects, but eventually it would be the talk about extraterrestrials, and then we would have this revelation of the technologies that come with it, and possibly that would be once this wave has manifested. Because if 5 waves are done, what we should be looking at after that is the correction of this entire thing, which could mean Armageddon, essentially. Because if just try to picture this, why is it that all the billionaires in the world, when you're a billionaire on a planet like the Earth, you are essentially ruling the planet. So why is it that you would spend all your money and all your capital in trying to leave this planet? It could be because you can, in a way, anticipate that once all of this does manifest, this system, this traditional system of finance, the way it has taken over the world, the way it has driven the world, if this is to manifest and we are to get a correction, like that of the Great Depression, this is a 89-90% correction. So if these 5 waves have to build some kind of a correction, that is essentially Armageddon, and all that these billionaires are trying to do is they're trying to hedge life itself, because if one planet is not enough and life on this planet and life on this Earth has to be threatened, there has to be a way to hedge it, and the best way to do it is to create multi-planetary settlements. So this is the big macro picture, guys, and this is the big opportunity that lies ahead of all those who can see what is right before us. It is going to get very rational, because that's what parabolic structures do. This is a parabolic structure on 100-year time frame. All right, this is not something that is happening today and tomorrow. This is a parabolic structure on 100-year time frame, and there is potential for this coming decade to be the big run up towards the end of this parabolic structure. So that is so significant in terms of what can happen, but also it is so significant because essentially, if you're watching this review and you're following me, you are highly interested in Bitcoin and you're highly interested in cryptocurrencies. So what I want to do is I want to add Bitcoin into this picture, being the rare asset that it is. I want to add Bitcoin into this picture because Bitcoin has been added into this picture after this final fear wave, and it's designed, and what it has been designed to do is to replace what has been the basis for this entire move, and what I would say is over the last decade Bitcoin has done really, really well. First of all, people would say in terms of price and in terms of surviving, but Bitcoin has not only survived, it has thrived as an ecosystem, wherein now at this current point we are having institutions using it as a hedge to the dollar, which at this point, right before its last wave for all asset classes, is in a state of big decline. We will quickly look at the dollar also after that, but we do know if you don't know, you should be studying the history of money. If you join our Discord, we have resources where you can study and understand the history of money. You can look at the Discord, you can look at the Subverto, the website, the blog we have, where we're sharing the history of money. The fiat currencies have never in the history of mankind been able to survive. And why is that? Because of human greed. Fiat currencies are ruled by human beings, and eventually they are ruled by power and greed, and that is the cause of their destruction. I think after this big drop that we had, and the virus and the catalysts that have come through it, this cycle of greed for the dollar has really been accelerated with the kind of printing that is going on. Because of this acceleration, what we're getting is inflation of assets. And I mean, people are already calling tops and they're thinking, oh, this is going to die. But just look at the big picture, guys. The big inflation and the big repricing of the assets is yet to come in this decade. And what is the big hedge, and um, what is the big resource in which people will move, is something that is not being ruled by greed. Bitcoin is being ruled by code. It is being ruled by artificial intelligence. That is what is governing it as of now. It is very complex and very difficult to change that in Bitcoin. And everybody who believes in it and the strong community that it has is doing everything in their power to let it be the way that it is. So because of that, this repricing can take place, and what has been the asset of the decade, it has been Bitcoin. So just look at it. We had this big move over here in 2019, and from 2009 to, I would say, the end of 2013, 2014, before we got a big consolidation. What did Bitcoin do? Bitcoin went from $1 all the way to, I think this was the first wave, to 130. Let's just quickly look at where we went on the first wave. The first wave was from basically a cent, or from being worth nothing. It was close to, I would say, 12, 20, 25, $30. That's where the first wave went to. The second wave from $30 went all the way to $1,400. So let me just go back to the fractal. Yeah, so we had the second wave, which went all the way to $1,400, which was where we were getting this consolidation. All right, so from basically a cent to $1,400 into this consolidation. Then from $100 we went to $20,000 into the second consolidation. So you do know, since the beginning of 2018, we have been in a consolidation, but now this repricing is to take place. Yes, we can get this further move up to the initial targets that we were talking about for Bitcoin, which can be, it is possible that 42,000 caps it. If we are going to get a structure like this, which means we can go slightly higher, and then we can move into another consolidation. So if something like that happens, it is possible that Bitcoin can hit somewhere close to 42,000 and we get another consolidation. But once price has to move out of that consolidation, you can see the kind of move that all assets can be making against the dollar. And if that is so, just put it in terms of what could be possible for the digital assets that are to replace this traditional system. For this to mature, it can take this entire decade for this asset to mature. But just think about the relative money flow. We have not, in Bitcoin's life cycle, had this repricing of assets taking place. We've only had what we can call a test pump, a consolidation, and another small pump. So this is what we've had. This 250% move that we've had to this consolidation. Bitcoin has gone from 1 cent to $20,000. So the next 250% move, it is up to your own imagination what could happen to the asset that has to be the real store of value, where human beings are not involved, where human greed is not involved. So this is one big part of the macro picture that I wanted to share for you. And you really need to zoom out to try to understand what we may be on the precipice of, and what is the opportunity over the next year that lies right before you. Staying in theme with our macro picture, what we're looking at is the quarterly chart of a relative dollar. And what you want to see is the last big pump we had from 2010 to essentially it was 2012, 2013. What all we did is the assets got repriced according to the dollar, and look at what kind of a drop we had. And what I would say is over the last decade, all we did is make a correction of this large big wave down that we had. So we have made that correction. The 618 has gotten front run. We have taken out all the liquidity and we've made a strong move away. So this is a very corrective structure, and what I would say is that now this would just carry on further downside for another wave, and this is what would create that big pump that I was talking to you about, which is just a repricing in terms of the dollar. There's nothing magical happening there. Everybody's like, oh, how can it go up so high? Well, it can go up so high because whatever it is going up high against is going down so quickly. So this is what we can see is happening right now. You can see commodity pumps across the board, some really, really strong moves that have not been seen in generations, and all they're doing is repricing the dollar. It's just to see how dangerous it can get. Maybe we don't have to go all the way to 2027 and there are no corrections and it just moves really quickly, and something really dangerous happens, because it is the last wave, so it can be very irrational. But for now, this is all it is. We've had one big move, we've had a decade of correction, and now we are on our way again. And currently on the lower time frames, we are heading into the VWAP. We are headed into strong quarterly level. So what I would say is that we are still, in terms of in commodities and everything else, in a consolidative structure. It is possible we get another month or so of consolidation over here, and then we do get that further continuation. So just keep a lookout for that. This quarterly level will just go down to the weekly now. So essentially just this quarterly level was what we had as support. I had spoken about this as support last week. We very clearly closed below it. Now along with the VWAP, we have another quarterly support which is just approaching, I would say, just probably 10%, another 10% below. Sorry, but a couple of percent. In terms of assets, it would be another 10%. And that is why I think there is still another leg up for most things. But we have this support, and after this we have another big move which creates the next support. And beyond this next support, I think there is just thin air, to the downside. This would just go into price discovery. If you flip this chart, it would just be in price discovery beyond that. So just be aware of this, that we could be headed into another slight consolidation before making another leg, and this has been a really strong move, so it could get a bit of a bounce, which would create that possible correction on Bitcoin and other commodities that we have been looking at this whole while. Because you can see the strong move, it has been aided by a powerful move up. Gold, silver, everything has been consolidating ever since the dollar began to consolidate at this quarterly level. So it is possible that we do get this little slight bounce and we get that correction across the board, and then we continue moving downwards, because this is what the structure of this move is showing, and it is very much in line with our macro picture and what we see going forward. So what I've done is I've shown you a couple of time frames. I have initially started with crypto on the medium and smaller term time frames and shown the potential of that slight correction that we can get, which would be a great buy opportunity. So that could be matched with this support we're about to approach on the dollar with a slight bounce, and after that move we can make that next move down on the dollar, which means the next leg up on all assets which are relative to the dollar, and get that next consolidation for the big pump. So this is what I can see in relative to the dollar for what we are seeing in the midterm and the near term. But for the macro picture, I showed you the 3-month chart where we've made this big move over a decade of a correction to that move, and this just has all the looks for continuation, guys. So just be aware of this, and it is just completely in line with what we are looking at for a higher time frame. Here's what I want to show you just to make you understand this relationship with the dollar and for the rest of the asset classes. We have silver in the standard green and red. We have dollar, which has been inverted, which is the line chart in orange, and then we have Bitcoin in the white and blue. And you can just see very clearly how well everything is correlated. We can go further back and you can see the perfect correlation in these assets here. So you can go further back and just look at the correlation. So it is the dollar dropping that is just repricing everything along with it, and if you are trading cryptocurrencies, you should be well aware of this. You should be well aware of tracking the movement of other commodities and other assets that are being repriced with the dollar, but also you should be well in tune and well in line with what the dollar is trying to do, and just don't just look at these independently. Don't look at cryptocurrencies independently right now, because this is what is going on. They are not moving independently. Everything is moving in a very correlated manner, and considering what is happening, this could be the way it goes on for the next 6-8 years. So just keep an eye out on this and chart these different assets together, because it is quite important, and it is something that is not only significant, it is very clear. You can very clearly see how this works out and how this has been working out ever since we did end up getting that big fundamental drop with the virus. So this is something that you need to look at and something you need to keep your eye on, and it is very, very significant, this correlation across assets. And now that I have explained it to you and showed it to you in charts, it should be clear to you why this is going on and how this can potentially pan out. If you found this video helpful, please give it a thumbs up and go ahead and share it with someone else. And if you have any questions about what we covered today, please leave them in the comments and I will be sure to get back to you or answer them in my next video. For more trading content and education, go ahead and click on the video on your right. Thanks for watching, guys, and cheers!